as Charlotte said, I'm Taylor Green, Audit Senior here at Dannible with Peggy, who's obviously already been presented once today.
Yeah, I mean, we're gonna, some of the, Christine and Taylor did write the presentation. And we chose to talk about audit survival. We're gonna talk about some different things as far as like best practices and pitfalls, and, really kind of go through, with Christine being in our accounting department for our clients. We have a lot of nonprofits that we do the accounting work for. So we are also typically involved significantly with the other audit firms to do the audits with them. So they have a unique perspective on what the best practices are to get ready for audits, and kind of how we do that for our clients when we're on the other side of it.
So today we're going to talk about something that really everyone here has felt at some point: the audit panic. When you receive that initial notification email, your stomach drops a little, employees start asking questions, suddenly everything feels urgent, and files you know existed for sure, you suddenly can't find. So everything is suddenly rushed and very important, and there's not enough time to get anything organized. Today's session is designed to change that experience as a whole. By the end of our time together, I want you to feel more confident, more prepared, and more control of your audit process. We're going to walk through the most common pitfalls organizations run into, the key to communicating with auditors, a practical step-by-step approach to moving from panic to prepared, and finally, what you can and should be doing year-round to prepare for the audit. So we're going to start with a first poll with: has your organization been through an audit before? Really simple. Oh.
Here we go. All right. Technical difficulty.
Technical difficulty.
We're going to chalk that up as technical difficulties today.
All right. So
what's the right answer?
There is no right answer. Yes, no, or maybe you haven't done a full-scale audit. Maybe you've only done a financial statement review, which is a lower level of assurance and a little less testing than a full-blown audit. But there is no polling question popping up, so no need to put a question into our moderators. So we'll go right into the presentation then. So why do audits feel overwhelming? Audits tend to trigger a panic response for a few very specific reasons. One, they come with deadlines that feel non-negotiable. Auditors have timelines to get things done. Boards are expecting reports. And those deadlines don't pause your day-to-day responsibilities on top of all of that.
And it may not be just the deadlines of, the organization, but obviously we have deadlines for granting organizations. If you're having a compliance audit with the federal government, getting all the information ready so that the 990s or 990 PFs can be done. So there's a lot of different deadlines there.
Banks, if you need to get statements to banks. Second, audit requests can feel unpredictable. Many requests are actually very similar year over year, but they often arrive all at once, so everything feels very urgent. And third, this is a big one, there's often an emotional component to audits. People worry about being judged, and they worry about missing a document or an error that's going to reflect personally on them. But many people feel like audits are a test that they can fail, and that mindset alone creates anxiety. So let's reframe the narrative. Audits aren't about catching people making mistakes. We're not evaluating you as a professional. They're evaluating whether documentation supports what's in the financial statements. We expect questions, we expect follow-ups, and we expect to find opportunities for improvements. So when you reframe the audit as a structured review rather than a test, it becomes far less intimidating. So now that we know why audits are very overwhelming, let's dig into some of the most common pitfalls that we see again and again. So this section is intentionally focused on what could go wrong, not necessarily how to fix them, but we'll get to the solutions and avoiding them in the next section, the next little piece later on in our panic to prepared section. So the most common audit issue is disorganized documentation. Support may exist, but it's scattered across shared drives, email threads, desktops, or even paper files, and no one is quite sure which is the final version. When documentation isn't organized consistently year-round, the audit prep turns into a scavenger hunt. This creates stress, not just because of the documentation is wrong, but it takes time to locate and confirm that it exists. Auditors value clarity and traceability, being able to quickly see how a number ties back to support. We aren't just checking the numbers, we're also verifying the evidence exists. From an auditor's perspective, missing documentation, it isn't just inconvenient, it increases risks and can lead to more questions and probably more testing as well. So more support that needs to be gathered. Another common problem is there's no clear ownership over documentation. Everyone assumes that it's someone else's responsibility for maintaining it. When that happens, requests take longer to fulfill, staff scramble to piece together information, and the audit immediately feels stressful. Internal controls are another major area where organizations struggle. Sometimes controls don't exist at all. Other times they exist on paper and they're not actually being put into practice and operating the way they were designed to. We often see controls that worked well years ago, but no longer make sense because the size of the organization has changed or the structure of the organization has changed. In some cases, there's a heavy reliance on manual controls, which increases the risk of human error. For example, manually entering bank transactions rather than linking a bank account and having those transactions flowing automatically into your accounting system so that all of your records, you're making sure everything is included. Segregation of duties is also a frequent challenge, especially in smaller organizations. When one person is responsible for receiving the funds, recording the transactions, reconciling accounts, and even making deposits, it creates a significant control gap. Even if there's complete trust in that individual, auditors still have to assess the risks. A written policy that isn't followed consistently is just as concerning as having no policy at all. Data and systems issues are another common pitfall, particularly when organizations rely heavily on spreadsheets that are outside of their core accounting system. Spreadsheets can be useful tools, and we're not trying to dissuade you from using them. However, problems may arise when multiple people can access them and update them, and version control is weak. You don't know which is the correct version that should be updated, and that changes themselves aren't documented. So you don't know if the change being made, why it was made, and if it's correct. In those cases, it becomes difficult to determine which data is accurate. Weak access controls or shared logins also raise concerns. Auditors were looking for clear audit trails. We want to know who made the change, when they made the change, and why they made the change. When systems don't provide that level of transparency, auditors have less confidence in the data, which again leads to expanding testing and more scrutiny on your records overall. Staff and training issues also play a big role in audit challenges. Many staff members simply aren't aware of audit requirements or don't fully understand organizational policies. New employees may inherit a process without any documentation explaining why things are done a certain way. They might not understand why you need to write on your invoice what program this expense relates to. High staff turnover only makes this worse, especially when key processes depend on one individual for them to occur. We often hear statements like, that person used to handle this, or, oh, I didn't know we were supposed to keep that. From an audit perspective, lack of awareness leads to inconsistent answers, delayed responses, and gaps in documentation. And all of this adds time, frustration, and risk to the audit process. So risk and compliance management is another area where organizations tend to be reactive rather than proactive. Risks are always identified, aren't always identified or reassessed regularly, and regulatory changes may go unnoticed until an audit brings it to your attention. Previous audit findings are sometimes ignored and or addressed only temporarily, which leads to repeat findings year after year. Auditors expect to see progress. When the same issue appears multiple times, it signals weak oversight and a lack of accountability. Even small improvements can make a difference, but ignoring findings altogether almost guarantees continued problems. When we're reporting findings during our audits, we're not doing it as we need to say something. We're giving you recommendations that we think will improve your organization. Probably a good idea to put those findings, to fix those findings, correct them.
Right, we're looking for, right, we want to, and as Angela said, when there's less issues in the organization, that's the organization you really want to audit. Like, we want to work with you guys to make sure that the issues that we're finding is you're starting to slowly improve on those things, and really kind of take that seriously. So, maybe in a few years you could have an audit that doesn't have any comments because you've made such improvements that, there is no comments to make it.
Follow-up and remediation is closely tied to this. Many organizations struggle with implementing corrective action plans in a meaningful way. Sometimes fixes are delayed, sometimes responsibility isn't clearly assigned, and other times changes are made, but they're never monitored to ensure that they're actually working as intended. Saying something is fixed isn't enough. Auditors look for evidence that corrective actions were implemented, documented, and sustained over time. When that doesn't happen, repeat findings become almost inevitable. Governance and oversight also play a significant role in how audits unfold. Limited management or board involvement can create gaps in accountability. When roles and responsibilities aren't clearly defined, important issues can fall through the cracks. Auditors assess not only the numbers, but also the tone at the top. Boards and leadership are expected to be engaged, ask questions, and understand the organization's financial and compliance risks. At the end of an audit, often, not always, the auditors will present the financial statements and the findings to the board. The board should be paying attention during these. There's often not a ton of questions being asked, which kind of shows that the board isn't as involved or understanding of what's going on with the organization. Asking questions shows the auditors that you truly care that the financial aspect is working just as well as just the programmatic aspect of the organization.
Right, when we're presenting, I've always done my audit presentations to boards with the insight that I want to make sure that the board understands the financial statements. So my presentations have always been not necessarily talking about the our board report and the auditor's responsibilities and management's responsibilities specifically, but I usually spend quite a bit of time on the actual financial statements to explain the theory and like the importance of different things so that not only management can learn, but the board of directors, right? The board of directors is made up of a lot of different people who may not be accountants, who may be attorneys or different areas that, you know, they don't necessarily understand the financial statements for nonprofit organizations. So again, you know, that's what we try to do.
Hopefully many, if not all of you, were at our nonprofit conference last year where we actually discussed the different roles and responsibilities for the board versus management. So hopefully you guys are all professionals, experts on what those different roles are.
Right, and just think about too, you talked about the segregation of duties, right? If you are a, I think we talked about this last year, right? This is wonderful. If you are a nonprofit organization that is smaller in staff and you have a board, that board may not be just completely oversight board, but they may have to take some a little bit more involvement in the organization, like segregation of duties. What if you have one accounting person? You may have to have like the treasurer who is reviewing the bank statements before they come in, or just doing a little bit more so that, you know, the people that are on staff know that there's oversight, and that's a really great internal control to help with segregation of duties.
So preparation and readiness is another major pitfall. Many organizations aren't clear on the scope of the audit or what documentation will be needed or when requests will be due. So this uncertainty leads to last minute scrambling, rushed responses, and increased stress for staff. When records aren't prepared in advance, mistakes are more likely and the audit feels chaotic rather than manageable.
I'll tell you one story. I've told the story to my staff before. When I was a staff person, I've had people say to me, if you look organized, if everything you give me is neat, then it makes it look like you appear that you know what you're doing, whether you do or not. And I think that perspective too, like when we talk about like as a staff person with the partners, it's just kind of the same thing. It's a little bit of the same thing with a audit team, right? We go in there and everything's really organized and you're answering our questions right away. You know the answers, all of that stuff. It gives us a positive feeling that you guys know what you're doing, and that, you know, when we start getting fed information that isn't organized and consistent, then we start asking more questions.
I'm a lot more skeptical of what we're being told.
Yes.
So communication and organizational culture, one of the last pitfalls we're mentioning today. This can either ease the audit process or make it significantly more difficult. Defensive attitudes, inconsistent responses, and fear of admitting that you're wrong or mistakes have been made all create tension. Auditors aren't there to catch people doing something wrong. They're there to assess the risk and verify information. When staff are afraid to speak up or feel judged, transparency suffers. Poor tone at the top can reinforce this fear. And if leadership discourages open communication or treats audits as adversarial, that attitude often filters down through the organization. On the other hand, clear, honest communication tends to lead to smoother audits and fewer issues overall.
You guys ready for a question, a live question?
Oh yeah, so exciting.
One of our attendees has a question. I'm going to open it up. Brenda, go ahead and ask your question.
Uh-oh.
Did you have a question?
I'm sorry. Earlier I had a question regarding sponsorship, but I think it was in the other session.
Okay.
About how we I don't remember. You caught me off guard. But it was basically about when they were talking about the different donations, or I think it was quid pro quo or something like that, where if they gave an example of $75 donation, 20 of that was for the t-shirt and 55 of it was tax deductible. But I was concerned about, we do a big event, community outreach day, and we request sponsorships. Some people purchase tables, or some sponsorship levels, they get a logo in our, um, we've never been audited, I'll say that, because we're very small and we've been 990 postcard, but we're getting a little bit better. But just trying to get a grasp of all this. So yeah, that was kind of jumbled up. But if there's anything in there you can respond to, I'd appreciate it.
So luckily, we still have our tax experts in the room. Any commentary?
They're discussing the question to.
Yes, so if you're were you getting advertising or were you getting contributions and they're getting something in return?
So, for example, depending on what level they did sponsorship, they might they would have a table at our community outreach day if they chose. They would be listed as a sponsor. They would
So say they're
something on their website or whatever. Just
yeah, so say they're getting like a few, like with their sponsorship, they're getting 4 seats or 4 tables, then you would put in your donation receipt what the value of those like 4 tickets would be.
okay. So right. So the information table that they'd have out so that they can meet the community members. Because it's like an outdoor fair sort of thing. So what other people are paying to have a table at the event, they would, yeah, I don't know.
So if they're just getting a table, they're not really getting anything in return. It's more of if they're getting like a meal or you know, something that the organization had to pay expense for. But if they're just paying amount to have a table set up, then it's not really quid pro quo.
Are there other people paying for like these tables to be set up without a donation? Like if there's like a price to have a booth.
Right. So okay. So if it was $50 just for a table, but say for example, like we have these different levels, like a community visionary, this, that, or the other, and they may receive a table. They may have time to speak to the audience. They may have a logo on our website or in the program booklet, or some of these little perks that come with um, the level of their donation.
Yeah, that's not really the quid pro quo. I mean, I would probably give them a receipt for the value that they contributed, but they're not technically getting anything like physical back in response.
Okay.
So
It just helps us put the event on, and it
right.
teaches a lot of people. We do it during National CPR and AED Awareness Week, so they're learning about hands-only CPR. They're meeting community organizations, whether it's the land bank or poison control or the emergency management fire department. You know, it's just community outreach day.
Right.
Good. Well, thanks for raising your hand. Hopefully that helped answer that.
All right, thank you.
Thank you. All right, ladies.
So we're gonna go into our second poll question, the first one that's popped up. What pitfall does your organization experience the most? Is it disorganized documentation? Everything is scattered around the organization. You're not sure where it is actually being held. Lack of internal controls. Maybe you don't have a set process in place, or you have one and no one's actually following it. Last minute scrambling. You guys aren't getting prepared ahead of time and gathering that information in advance. Or lack of oversight. The board isn't involved in asking questions. A few seconds left. Last minute scrambling seems to be the biggest answer, and disorganized documentation. And luckily for all of you, we do talk about that in this next piece that Peggy will be leading. So
So we're gonna talk from panic to prepared, best practices for audit preparation. And again, it's what I said before, we do this for a lot of nonprofit organizations. To, go through and do the preparation in conjunction with the on-site accounting people or the executive director. So we'll go through some of this, and Taylor will give her
I'll chime in.
when as the auditor.
Yes.
Okay, so at the end of the year, closing of the fiscal year, just keep in mind, so we're talking about closing of the fiscal year, but where I really want to like concentrate on is that it shouldn't be a panic, because a lot of these things you are doing all year long. You're closing all of this stuff, so you don't need to panic. It's just a matter of doing like the final close. I know that some organizations do, you keep the bank recs up, maybe the investment accounts. Sometimes you may be keeping some things, tracking more on a cash basis during the year, because you don't necessarily need to do such a hard close on the accrual basis at the end of the year. But when we go to the end of the year and prep for audit, then we have to make sure, if you are on an accrual basis, which most organizations need to be at this point, with the change in the New York State wanting everything to be on accrual basis when it comes to filing the Chart 500. So just looking at the list, we listed some different things like the bank accounts. Obviously, we need to reconcile those at the end of the year, to make sure everything is accountable, everything reconciles. We are preparing those bank reconciliations. Hopefully, if you're using QuickBooks, the bank recs are in there. Going through, and this is one of the things that we do. We go through and actually look at the bank reconciliation. Just because it reconciles doesn't mean all of those reconciling items are appropriate. So you need to actually, look at the outstanding checks, look at the deposits in transit, look at the other things that show up in QuickBooks in that listing, and question, do those make sense that they should still be an outstanding item? If not, you need to look into those to get those cleared up. Petty cash accounts. Again, something that we don't typically spend a lot of time in unless there was some issue as an audit, but making sure that reconciles, and you have the vouchers that all of the invoices or the receipts from the petty cash disbursements available in case they do get selected. The investment accounts, going through those, not only for audit purposes, you're reconciling to the investment statements, but for purposes of the audit, you not only need the balance sheet to agree, but you need to do the roll forward of the investments from beginning of the year to the end of the year to do a recap of your dividends, your interest, your unrealized gains and losses, your realized gains and losses, all of that stuff, to reconcile all of that, to make sure it agrees to the profit and loss section. And then one of the key areas for the audit is having that roll forward available, because on your statement of cash flows, we are required to show investment purchases and sales. So that's something that we would look at the client to do and make sure that that rolls forward, so we have the proper information to do that disclosure. The prepaid insurance, again, looking at that, I know that probably a lot of you do things on the cash basis when it comes to this during the year, but just going through and making sure that the expenses, if you've prepaid the insurance, making sure the expenses are in the right time periods, and taking a look at that, and pulling the statements and the insurance statements that we would need to do some testing on that. Prepaid expenses, there could be a variety of different other prepaid expenses. Anything you can think of off the top of your head, Taylor?
Tech, like if you have a tech contract, IT contracts, sometimes it could be like a 2 or 3 year IT contract. You may prepay that for all 3 years.
Yep. You prepaid that. So, just going through, and it's not, a lot of times people like kind of roll forward the same things over again, but you really should take a look at your general ledger and looking at it and seeing what could be prepaid to bring that up onto the balance sheet. The accounts receivable or grants receivable. Again, making sure all of that like works. We talked a little bit about the classifications and the categories in QuickBooks and making sure like if you have grants receivables, that all of that reconciles when it comes to the, a lot of grants are cost reimbursement grants. So you have to have your revenues equal your expenses, your net income on that particular column would be zero, but making sure you have the right receivables recorded based upon whether you've earned that revenue or not. Fixed assets is another item that accounting firms, audit firms usually provides assistance in. So just, making sure you understand who's responsible for that. If it's, if you guys are just keeping it on an Excel spreadsheet to keep that up to date. If you are not, and again, maybe you're doing that on a cash basis, but to, have somebody responsible for looking at the repairs and maintenance accounts, knowing what potentially will be having to be capitalized at the end of the year, providing those invoices to the auditors. Sometimes we do non-attest services where we're preparing the subledger for the fixed assets. So providing that to us, even providing it to us before we start the audit, so we can get that updated for you. And you get those adjustments made before the audit or before we're given the trial balance. The credit card accounts. Again, so if you have credit cards, making sure that you're getting a proper cutoff of those. A lot of statements are not at month end. They kind of go in the middle of the month. So you have to go through those, looking at the actual dates of the transactions to make sure those are getting recorded in the right period. The accounts payable, again, going through that, making sure, as part of our audit, we go through and do a cutoff for accounts payable, looking at, the invoices and the checks that have gone out after year end. That's really something that you guys should be doing when we're preparing for the audit, is to take a look and making sure that we're getting proper cutoff, especially at year end. There's items for accrued payroll. You may have a payroll that gets paid in, if we're 12/31, gets paid in January, but a lot of the days are for December, so we have to make sure we get proper accrued payroll done. We have to do the accrual for that. We have to do the taxes, and we have to do, one of the things we see our clients not doing is the employer's portion of FICA and their taxes. That's another part of the accrual. Accrued vacation, we may have like PTO that needs to be accrued. If you have loans, a mortgage, making sure you're getting the appropriate statements at the end of the year. If you have amortization schedules, making sure that's all available so that we can reconcile that. If you have a line of credit, making sure that you're getting the line of credit statement that shows the ending balance. Sometimes I've seen bank statements that don't give you enough information, and the client needs to reach out to the bank to get some of that information. Deferred revenue is another area. It really kind of is related to the grants or accounts receivable going through. And if you have a cost reimbursement grant and you have received monies on it up front, but have not incurred the costs associated with that, you may have to record that as a deferred revenue, as a liability back to the granting organization until you have earned that revenue and have the qualified expenses.
It doesn't really say on here, but also your net assets, tracking with and without donor restrictions is a big thing. A lot of smaller organizations tend not to track that. And it leaves the auditors kind of having to comb through your revenue for the year to see if maybe there's any restrictions on those funds. And then having to ask the question, following up, causing more delays in the audit of, this money was restricted for this purpose. Did you spend it how it should have been? Or should it be included in your net assets with donor restrictions on your financial statements? That's kind of one of those recommended, maybe keeping a spreadsheet that, with restrictions on who and how it can be updated, but tracking that separately so you know what all restricted revenue you've received and how those funds have been spent as of the end of your fiscal year.
A few years ago, the FASB in their wisdom changed the net assets for nonprofits from being unrestricted, temporarily restricted, and permanently restricted. And they chose to show on the face of the financial statements that it's with donor restrictions and without donor restrictions. And I remember getting a lot of questions from clients and going, oh, great, now we don't have to track that. We don't have to track any of that. And that's not necessarily the case. So you still have to track all of that. You need to know whether something is temporarily restricted or if it's permanently restricted and why, and keep track of that. Okay, we're going to the next slide.
Right.
Okay, organizing documentation, ask for audit request lists. So, as auditors, right, we always request or give you a list of things that we want to see, whether it's in Excel or Word. Some CPA firms use audit portals too, and making sure you have access to that to make sure you're getting everything uploaded on a timely basis. Maintaining a central folder such as audit folder to save documentation. So that, I think that's really important, and it can be a lot of different things that that you need at the end of the year. Just making sure you're organized and you're making sure you're getting all of that saved during the year. So when it comes to the end of the year, it's not a big deal. It's all there. So ensure documents are current and accurate, and clearly label the documentation.
Adding on to this, while we do want to receive all of our requested support, 8 a.m., the day the audit is scheduled to begin, some things are more important than others. And God forbid something happens and you don't have the time to prepare, ask your auditors. We can prioritize a list and say, we need this by Monday, this by Tuesday, this by Wednesday, to help you kind of decrease some of that urgency and panic in that week leading up or weeks leading up, so that you know what should be number one, number two as you go through that list.
Okay, so continued the organizing the documentation. So compiling backup of deposits, your checks received, backup of ACH deposits via the bank statement, and saving support electronically in accounting software. So this is auditors love this part, right? So in QuickBooks and probably other software too, you can actually, as your accounting people are going through the different areas, whether it's, deposits or the invoices, there is a feature in QuickBooks to be able to save all of that documentation in there. So that, and we typically as auditors ask for, accountants access to your QuickBooks so that we can get in there. And how wonderful would that be is that we can click on a document or a transaction and just be able to pop up the backup for it without having to ask the clients to pull this stuff for us. That's fabulous.
Saves a lot of time.
Yes. Okay, so now the next part, and this came from Christine, and somehow I got talking about 990s now. I'm not sure how that happened, but we have contributions over $5,000. So this is just something, to keep in mind when you'll get a client list for the audit, but usually attached to that or subsequently we'll get another request list for your 990 preparation. So, we put this in here. So any contributions over 5,000 for Schedule B on the 990, you'll need to go through and sort that, giving the name of the donor, the address, a copy of the check, of the letter, and a copy of the check or the bank statement showing the ACH deposit. So that's just something that we on the accounting side typically gather so that the 990 can be done efficiently.
Auditors do appreciate the copy of the letter though, so we can read it to see if there's any revenue recognition implications.
Or restrictions.
Or restrictions.
Yes. Okay, compiling backup of expenses. So, again, having all the vendor invoices available, or vendor receipts, again, saving the support electronically into the accounting software is always a great way to do it, and then support for all new fixed asset purchases. So, as I talked about that before, having that support, whether you guys do it or the auditors do the non-attest services for maintaining that.
Usually there is an aspect on the expense side of invoices when we're doing our audit testing should be authorized. So if you're gonna save an invoice, save the copy that has, the proper authorization or signature saying, yes, go ahead and pay this. Same thing, you should save copies of the checks that have these proper signatures on there as well.
And sometimes, you may use a payment system called, like there's one called bill.com. And, that actually gives you a lot of, control in there because you have somebody inputting the invoices and you have an approval process right into that software so that, you don't have to have it on paper. You can see within that system that the appropriate approvals are, being met, and sometimes you may set like dollar levels for approval of payment of these. Okay, so we're going back to the 990. So fundraising events. So Schedule G on 990. So again, we kind of talk about this. Angela and I even talked about this before with our first session. Is having the revenue per the event and then the expenses per the event. So just having those, because we may be netting it on the financial statements, but it depends on the situation.
And listing out your different fundraising events can help us determine if there's any in-kind expenses, which we will talk about more.
Okay, having all of your current contracts available in the audit folder that you've created. Having the signed and notarized contracts. Again, we like to see contracts that are signed and actually can't come up with the word. Executed. There we go, Charlotte. Executed contracts.
Yeah, listening.
A lot of times, clients will give us like contracts or loan documents or something that, there's no sign that it actually was executed. So, we really appreciate that when we get those. The list of grantors, name of the grantor, the address, the entity type. Some of that may be for purposes of confirmations, accounts receivable, grants receivable, if we need to do some of that.
And with the contracts, saving the vouchers, if they're expense reimbursement, cost reimbursement grants, and you need to be submitting vouchers to the granting agency, make sure you're saving copies of those vouchers. And whether we may need to know timing, you may not submit a voucher till after year end, but it's related to, say, your December year end, it's related to expenses incurred in November, but you didn't ask for reimbursement till March. That should really be a receivable on your books as of 12/31 because you incurred the expenses and you're due that revenue.
Oh, yeah. Polling questions coming up. Okay, so how does your organization save records? Hard copies only? We don't save them. It's a major red flag for our audit. Electronically, and they are all over the place. So we have 29 seconds.
Electronically is my preferred. Electronically and hard copy is even better.
Hopefully that, if they're doing it electronically, well, on their system, they're also saving hard copies.
Yeah. Few seconds left in this poll.
And how does this?
Perfect.
Perfectly, 65% electronically.
Which means they're ready to be attached right into your transactions if you use QuickBooks Online.
Or put in a portal or put in our link. In our share file links that we use. Okay. So again, talking about organizing documentation, statements and reconciliation reports for your bank accounts. for your investment accounts, loan statements, the credit card statements, and the line of credit statements. So you're just having all of that available is great so that we don't have to ask for it. Okay, so payroll. In this, I can definitely tell it's coming from my accounting department because I know what they like to see. So when we're doing the accounting work, we save the payroll reports per pay period. We get the quarterly 941 reports. We get at the end of the year the W-2s and the W-3. The earnings of all employees through audit period. Any compensation paid to board members, which will be needed for the 990. Benefits paid by the organization for the executive director. And then the 1099 NEC filings for the audit period. So these are a lot of the things. So some of these things like, when we're as auditors reconciling, a lot of times we will ask you guys to do a 941 reconciliation, which takes the wages that were recorded on the 941s and reconciles that to your general ledger wages. And there could be accrual reconciliations, there could be some tax issues and different things that could create a reconciliation, but we typically ask for that. And I know like in my accounting department, we typically do that for our audits.
Other things with reporting or with payroll, saving any authorizations if employees are, your annual raises, saving some type of documentation to support that those raises were authorized, as well as kind of HR compliance, making sure you have 1090, what are the letters? W-4s and I-9s for all of your employees as required to have. That's some things we'll usually, during our audit, we like to select a couple employees and make sure that all of those personnel files are complete. Doesn't necessarily impact the financial reporting, but it is a compliance issue that should be maintained.
Okay, in-kind donations. If the organization receives in-kind donations, it is important to track them on a spreadsheet. So this is something that I don't know how many years ago now, the FASB put out more guidance. So there's more stringent requirements in the financial statements for in-kind donations and showing the expenses associated with that. There's enhanced disclosures in the financial statements and the notes, enhanced how are you coming up with a fair market value to come up with those things, whether these items have been restricted by the donor. So there's a whole bunch of different disclosures that we also have to make. So, getting the date of the donation, the description of donated item and the value of the donated item. And this is something that you really should be maintaining and tracking throughout the year. Okay, organizing documentation continues. So policies and procedures, having established policies and procedures updated. So if you have, as part of our audit, we have to go through the internal controls, get a good understanding of what you have, how things are operating. And typically we ask the client to write up a like kind of a narrative of what you do in each of the areas. So we will ask, in the client letter, the client request letter, to go through for the client to go through and review those and make sure that they're updated if there's been any changes, that we would like to know about those changes so that when we're doing our testing, we know how things have changed and we won't be surprised.
Yeah, so these should be reviewed annually. And in addition to those four, you also want to look at payroll policies and procedures and your financial close. What is the policy and procedure for each month or quarter, annual, year end? What's being done?
Okay, other miscellaneous items, final board approved budget. So having that documentation we do during the audit, a lot of times we will take the approved budget and compare that to the profit and loss and look for any significant fluctuations and get explanations for those. Having your board meeting minutes somewhere that they're handy. We do ask for those on all audits so that we can go through and review and see if there's anything significant that we need to know about. And the number of volunteers.
As well as any perm file, organizational documents that you have, like your handbook, retirement plan documentation.
I think this is our last one, right?
Yeah, this is the
Our
last poll.
poll question. So what do you think is the most important during the audit? Availability, communicating with the auditors, timeliness, or all of the above?
Really hope everyone selects a specific answer. There is a correct answer. This is not a matter of opinion. There is a correct one. Got about 10 seconds left. Few seconds.
Countdown like years.
All of the above.
Great
Yeah.
answers. Okay. Availability. So for our last few comments, coordinate with the auditors for a time that works for both parties. Be sure scheduled time allows for proper preparation. Typically, a week is scheduled for field work. Try not to schedule other meetings, trips, etc. Make sure you're available after the week. And there's a picture in front of that.
Of field work for any.
So really the ideal thing is if you schedule with the auditors, make sure you're available because we will have questions and making sure, because what you really want to do is get us the answers to our questions, get us all the documentation, and get us out of your hair so that we can get this done efficiently with little trepidation of the issues.
We dedicate ourselves to you for a week. We ask that you do the same for us.
So communicating with the auditors, keep responses clear, direct, and factual, provide documentation, additional explanations when necessary, redirect questions to correct persons when necessary, and ask for clarifications on questions when needed. Timeliness, try to dedicate scheduled time to the audit as best you can, respond to the auditor's inquiries as quickly as possible, and provide selection support as quickly as possible.
Kind of a combination of all three of those. If you have deadlines that you're aware of, make sure we are also aware of them so that we know we have to turn around and get these financial statements audited and back to you in a certain amount of time.
So be proactive, stay on top of the documentation regularly, create an electronic filing system to paying records, saving the deposits as they happen, the expenses, all of your statements, I think that should probably said contracts, payroll reports, board meeting minutes. And we are maybe 1 minute over, so we're good.
Yeah. Just a final comment, create a system, write it down, and make sure all of your employees know the system and are following it.